Make better money choices. Choose a bank that takes your money seriously. Business Watch is brought to you by Nedbank.
It's Wednesday. We meet again. This is another live broadcast of Nedbank Eswatini Business Watch right here on Eswatini TV. I am Nathalie Sitole in the studio with my colleague Lungelele Makakulam from Ben. How are you?
I'm good, Noti. How are you this afternoon?
Not bad. Besides the flu,
yeah,
I'm just happy to be alive.
We both have flu, but still pila. All right, welcome to our viewers. Thank you for tuning in. This is Nedbank Business Watch. We are live on our YouTube page, Eswatini TV, as well as on DSTV channel 286. So today on the program, we'll be talking about investing. We'll take you back to an interview Sifiso had with Nedbank's Zama Ngwane Dlamini, where she was talking about the difference between saving and investing. She'll break it down for us from the difference between saving and investing to the different types of products available for ordinary consumers who want to partner with Nedbank. Do stay tuned for this interview.
And on my end, for the past year, Eswatini's livestock industry has been rocked by the foot and mouth disease. Following the outbreak, we've seen livestock movement restrictions. We also have seen livestock auctions suspended in affected areas, and exports to premier markets were certainly disrupted. Now, yes, the economic consequences have been significant, but it appears there's light at the end of the tunnel. The Ministry of Agriculture has announced that there are no active cases as yet. Now, that's good progress, but we want to know just how soon or when soon local farmers can begin exporting to international markets. Also, in another conversation, we'll speak to in-house economist Sanele Sibia on the recently launched Eswatini Household Income and Expenditure Survey, AHIS, which indicates that national poverty rate declined from 58.9% in 2016-2017 to 53.5% in 2023-2024. He'll break down those numbers and what they mean exactly here on the program. But also before we close it off, Lulu, we are going to have a market analysis with the Treasury Department from Nedbank.
Oh yes, definitely. That'll be our final segment. Toba Kamete will join us in studio for that market analysis. But for now, let's go for a quick ad break. We'll come back with our business news.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Welcome back. Moving on with the program, let's have a look at some of our business stories.
In our first story, the Cooperative Voice podcast will soon be launched to provide more education and awareness on cooperatives. The podcast is a collaborative effort between the Ministry of Commerce, Industry and Trade and the German Cooperative and Raiffeisen Confederation. This was announced by the Minister for Commerce, Industry and Trade, Honorable Mangoba Kumalo, during the International Cooperatives Day celebration at Mavuso Trade and Exhibition Center in Manzini under the theme Cooperatives for a Peaceful World. The Minister encourages cooperatives to strengthen their governance structures to ensure that members' money is protected and not lost.
Siltiko singhulumende sicela kugcizelela lokuthi letimali tebantfu lesitiphatsa kulama cooperatives asitiphatse ngebunono nangebuciko nakwesaba intfo yebantfu kuze kwekuthi lo msebenzi longaka ungabuyeli emuva. Siyajabula lamuhla kwekuthi ema cooperatives anema assets lasafika ku 3.8 billion emalangeni. Lokho kusho kwekuthi uma unikwe le mali lengaka ukuthi uyicize kumele kwekuthi wente isiqiniseko sekwekuthi kude emagundwane latawusonzela kuleyo mali. Siyacela kwekuthi bonke baholi bema cooperatives eveni bakwente kube i-priority yabo kwekuthi tindzaba te-governance netindzaba te-financial discipline atiphindzi tibuye sitewutikhuluma eveni kwekuthi i-cooperative tsite seyinebulukhuni ngoba akuvakali kwekuthi imali iyashonaphi. Bekunene siyacela lokwekuthi sethule nalu hlelo lolusha i-initiative lesha eveni lebitwa ngekwekuthi the Cooperative Voice Podcast lesitabe siyusungula masinyane. Le podcast lena ngumsebenti lowentiwe litiko na NCFE lekungena i-Apex organization yethu kanye na DGRV with the simple purpose of informing Eswatini about the philosophy, the operations, and abundant opportunities that exist. Kulenzaba lena ye-Cooperative Voice Podcast kutaba ngumsakato wethu lotawutfolakala ku-internet lapho khona sitabe sitshela sive ngekwekuthi sentani kuma-cooperatives ngoba sifise ukuthi lonke eLeswati lingagcini ngekuva ngema-cooperatives nangekwati ngawo kepha ligcine liwajoyinile kuze kuthi lo msebenzi uqhubeke uya embili.
The German Cooperative and Raiffeisen Confederation, DGRV, is strongly supporting the digitization of cooperatives in the country, working closely with the Ministry of Commerce, Industry and Trade to advance digital transformation within the cooperative sector. Delivering remarks during the International Cooperatives Day celebration at Mavuso, the Program Director for Southern Africa highlighted the importance of digitizing cooperatives.
We have a strong focus, and Eswatini hosts the Competence Center for Digitalization of Cooperatives in Africa. And a couple of digitalization solutions have been designed. One important one which will touch every one of your lives, your cooperatives' lives in the future, is that of supporting the Office of the Commissioner in implementing a digital, robust and modern digital database of cooperatives in the nation. And this is not just a database for the ministry to know about all the details of cooperatives, but it's also a solution for each of your cooperatives to know your members, to be able to be compliant and to ensure compliance, and that you know in real time who your members are, where your members are, and what issues and challenges, but also what opportunities you as cooperatives have.
Still at the same event, Tami Pagati, Vice President of the National Cooperatives Federation of Eswatini, highlighted the importance of cooperatives, emphasizing the role of cooperatives in driving economic development and community empowerment.
The theme for today, Cooperatives for a Peaceful World. This theme affirms the vital role of cooperative enterprises in advancing social justice, fostering inclusion and building trust across communities. This is precisely why we are gathered here today, not just to celebrate, but to demonstrate through our collective action that cooperatives are indeed building a more peaceful, resilient, and inclusive world starting right here in our own communities. This is the very reason we have cooperatives, They are to champion collective empowerment, to bridge economic inequalities, and to ensure that we rise together, leaving no one behind.
All right, and that's it for our business news. It's 9 minutes after 2. You're still tuned into Nedbank Business Watch.
We're back with the Ministry of Agriculture's Principal Secretary after this. Welcome back. You're still watching Nedbank Business Watch. And moving on with the program, the Ministry of Agriculture has announced that the foot and mouth disease outbreak has been contained, marking a major milestone after months of uncertainty for the livestock industry. However, for the many businesses that were forced to immediately suspend exports when the outbreak emerged last year, the big question remains: what happens next? When can they realistically expect to re-enter lucrative international markets? What process must the Ministry of Agriculture, in partnership with international regulatory bodies, complete before Eswatini can regain its export status? And what assurance can be given to businesses that have suffered significant losses as a result of the outbreak? To help us answer these questions, we are joined by Principal Secretary in the Ministry of Agriculture, Sydney Smelane, coming to us virtually. Mnguni, good afternoon. Thank you very much for your time. Can the ministry at this point quantify the losses that have been suffered by the local livestock industry as a result of the foot and mouth disease? Mnguni, please unmute your audio. Right, please. Okay, we've lost him there, but we're still trying to get in conversation with the Principal Secretary in the Ministry of Agriculture. The latest development is that the foot and mouth disease has been contained. 450,000 cattle have been vaccinated, and there are no active cases as of now. But we do want to know, or at least local farmers, local businesses want to know just when soon they can begin exports. Mnguni, good to have you back on the line with us. I really do hope that you'll be able to hear me this time around. I was asking if the ministry can quantify the losses that have been suffered by the livestock industry as a result of the foot and mouth disease.
Thank you so much, Stole. I hope you can also hear me now.
Clear, sir.
Thank you. Thank you so much. It is indeed a great honor to get this opportunity to update the nation on the FMD status. One can start by saying that it has been a very devastating situation in the country that crippled a lot of businesses, livelihoods, as well as our export markets. We were worried that at some point in time we would have challenges to contain the disease. But one is happy to say that we have reached a stage where we are preparing to finalize vaccinations in the country. Let me start by saying that from the onset, we were targeting vaccinating between 60 and 80% of the livestock or cattle in the country. The reason being that once you've vaccinated between 60 and 80%, there's what we call natural immunity that takes over so that the remaining cattle do not actually contract the disease. So up to now, we've vaccinated more than 80% of the cattle in the country. Some have had double vaccinations, some single dose, but we are planning that in the next week or two, all cattle that have been vaccinated would have received the double dose. To respond to your question in terms of the impact that this has had in our economy, it was really sad indeed. We have planned that we have a strategy we're working on, or that we have actually set up to make sure that there is a status that we need to regain. This status was FMD free without vaccination as a country. That is definitely a tall order now because we've had the disease. So the first stage we have to achieve is the FMD free status with vaccination. That one, we have started communications with the World Organization for Animal Health so that they can come and review whether we are actually fighting and winning the battle. Once that is done, we will then go to the European Union, who will do the audit to check if the disease has been completely eradicated. If that is the case, then we will receive our FMD-free status without vaccination. I must say that this is a big challenge because there is a need for cooperation between ourselves and the business community. I want to say that we want to appreciate the support that we got from the business community. From the 12th of May 2025, we were not able to export any meat products from the Kingdom of Eswatini. And that was a problem for our exporting companies, for businesses locally, as well as livelihoods, because a lot of people make their livelihoods out of selling or buying cattle. So we are hoping that in the next 2 weeks, we will be announcing changes. For now, main changes that people will see on the roads is that we will no longer require them to come out of the car, but we'll be checking for contents of meat products that may be carried in the cars. Otherwise, now we have reached a dry component or stage of our checkpoints where they will not need to go through the footpaths. Secondly, we are looking at a time in 2 weeks' time where we will announce that we have finished our vaccination, and then we will look at how we can free some movement of livestock in the country. But then again, with caution, because this has to be done orderly to make sure that the disease does not come back and we get reinfections. Thank you.
Nguni, I understand that regaining FMD-free status is still a work in progress. At the same time, the Ministry of Agriculture has indicated that it is now eyeing global beef markets. With that in mind, just how soon can local farmers or livestock keepers expect to start exporting beef to premium international markets?
This is a very good point, and I want to say that it is highly possible. The challenge we are having is that some of the markets that we had already attained are using the EU standards. They haven't defined or developed their own standards. But for markets that would have their own standards, I think we will be able to achieve those standards and start exporting meat to their countries. The EU standards were quite stringent and take a long time for us to recover to attain those standards once again. So we are looking at hopefully in a year's time, we would have found other markets that would be able to accept our products as long as if they've defined their own standards that we are going to meet. But otherwise, even the EU standards, stringent as they may be, it is very likely that in a year or two, we would have cleared our situation. Maybe the challenge there would be in EU sending the audit team coming to the country to declare us free from FMD and free without vaccination. They will have to send the team, and we don't have much control in terms of when they would be here. But we are hoping that this would be done because we are doing it in collaboration with the World Organization for Animal Health.
Right, Nguni, briefly, what would be the ministry's advice to especially local farmers to get them to prepare for the reopening of export markets? Just briefly.
Yes, I will say this. There are areas in the country where we did not vaccinate our cattle. The reason is simply that we are hoping that natural immunity will take care of that situation. But at the same time, the other reason was simply that this is the batch of livestock that is going to assist us to move quickly and achieve the FMD-free status without vaccination. So what we can advise to our farmers is that if we want to start moving livestock, especially from areas that were free from FMD to areas that have been affected by FMD, the first thing is you talk to us so that we vaccinate those animals. And as they move to the areas that were previously infected by FMD, there will be no issues because we want to avoid infecting FMD-free animals, just in case there is some outbreak that that happens. So we want to encourage our farmers to prepare themselves because the stage at which we are now is that if we get the clearances, then we will be opening the gates and people will be able to sell, export, and even local sales were actually affected with the FMD situation. So that has still not been running smooth, but as soon as we finish the vaccination process, we will see how we can ease the bans in all 4 regions in the country.
Nguni, we leave you here. Thank you very much for talking to us. That was Principal Secretary Sydney Smelane in the Ministry of Agriculture, just talking to us about the latest developments in terms of the foot and mouth disease, where the latest is that it has been contained in the country, but farmers are now looking to export. Otherwise, you're still watching Nedbank Business Watch. The show continues after this.
Bekunene lo msebenzi lesiwenda kunamuhla ube ngumsebenzi lomkhulu lo hamba isikhathi wahamba eMaswatini onke awubuka ngeliso leliqophele ukuthi konke lesikwendako ugcine livela kangwane kulakhele nini bekunene
Mswatu ingozi kuthula akayithathe akahambe nayo akayithathe yedenza bakhe
Welcome back, and thank you for staying with us. Moving on to the next discussion segment. The Ministry of Economic Planning and Development has released the latest Eswatini household income and expenditure survey, showing that national poverty has declined from 58.9% in 2016-2017 to 53.5% in 2023-2024. However, rural areas continue to experience higher poverty levels, with the Shisaleni region recording the highest poverty incidence at 72.0%, while Manzini recorded the lowest at 42.4%. The survey also shows that average monthly consumption expenditure per person increased from 1,388 in Malangeni to 1,926 in Malangeni, indicating changes in household spending power. So what do these numbers really mean for local economy, business sales, and consumer buying patterns? To help us understand the impact of these figures, we are now joined by economist Sanele Sibia, who is in the studio. Mr. Sibia, good afternoon. Thank you very much for your time. So the national poverty rate has fallen from 58.9% to 53.5%. Is this a significant improvement, and what does it tell us about the state of the local economy?
Thank you, Notsile. Good afternoon to you, and also good afternoon to the viewers. So in terms of the number and the direction, I think it's pretty good for the local economy. What we need to be cognizant of, though, is, it's still on the very high side, and we can't really, we have to be proud that we have been able to pull about 5% of the population out of poverty, but there is still this 53% that we need to pull out of poverty. So what I'm seeing now, Notsile, is all this is achievements that have happened just before we entered into the era of what we call mega projects and into that big level planning. So what we are hoping that going forward is the next iteration of the survey post the mega project era, we should start seeing a huge chip off of that number, and that is actually something we expect with what is going on down there in the middle field and the low field. And then in terms of what we are looking at in terms of consumer patterns, what this signifies is, yes, we've had people who've received a bit of an increase in income, but we have to be cognizant of the fact that there is still the cost of living pressures that households have to contend with. And it does show when you look at the numbers that, transport and food continue to to take up a huge chunk of that in household income. So we do need to continue, on that employment creation pathway so that our people have more than enough money to continue driving spending. But the number shows that when you look at our growth figures over the past 5 years, you'd realize that growth is largely driven by consumption in the kingdom. And we are seeing that coming out to play in these numbers that we are seeing happening that have been put out here today. But we still do worry about the divide, the regional divide. What we need to do is we need to think around inclusive and sustainable growth. How do we make sure that we leave nobody behind? The fact that Shiselweni is always lagging behind, and we are not seeing that policy shift towards taking the resources where they are most required. And I think that's what we need to learn right now, to say, okay, how do we decentralize and how do we redistribute so that we get resources going to where they are needed the most, so that we pull a lot of our people out of poverty.
I'm going to throw this one in with the hopes that you explain the economics in layman's terms. Despite this progress, more than half the population is still living below the poverty line. Why is poverty such a challenge? Why is it, such a difficult number to reduce?
The number that has to be reduced, in my view, it is not the poverty statistic. But what we have a problem with is the unemployment portion of it, because if we got our people into meaningful employment, what you're essentially doing is those households are going to have a meaningful income, and most of them are going to be above the poverty line. So you can't just look at poverty in isolation. That you have to think around what makes a person poor and when is a person poor. And what we are talking of here is poverty as measured by what we call a national income poverty line. And now what we need is incomes into the hands on pockets of the people. So this statistic to me mirrors what we are seeing around unemployment. We have an unemployment rate that is stubbornly sitting at 33%. So now that means you have around 1 in 3 of people or households that have an income, and now that translates into a heavy dependency burden. So what we need is a multi-pronged approach where we are targeting household income and also targeting the unemployment problem. So it's quite a broader spectrum of issues to consider.
On the meaningful income, do you mean in the sense that it contributes to the tax base?
Tax base, number one, and also it contributes to you being able to live and sustain yourself above the poverty line.
Right. But the survey also shows that average monthly consumption expenditure per person increased from 1,388 to 1,926. Does this mean households are better off, or inflation has had a hand?
Statistically, you would say households are somewhat better off. But you have to then also take into consideration the cost of living in terms of how much does this buy today, how much does this 1,900 buy in 2023 prices compared to how much it bought in 2016 when we had the last highs before this one that was released. So there is that statistical nuance to it to say, yeah, we are seeing these increases because year-on-year nominal incomes are going to increase and households are often going to find other sources to subsidize their consumption, and once that happens, we are seeing this increase. But congruently, from COVID, remember we've had inflation really just running up and hitting throughout the globe, and we have inherited all of those as a country. So you'd want to also just consider that how you balance that figure up. But overall, yes, most Eswatini are living very close to the 1.9, and if you convert that, you know, in layman's terms, that's not how the number is calculated, by the way. So if you were to take today's exchange rate and look at the average income of 1.9, then that means with a stronger exchange rate, we have, you know, most people living relatively above the poverty line, but that's not how it's calculated. Yeah.
And additionally, households are spending a larger share of their income on essentials, food, housing, education. What does this say about consumer behavior and the total cost of living?
It speaks to the issue of a burgeoning cost of living, because when you look at the statistics and what has been released, you know, households are largely just focused on the essentials, because what you've just listed, those are the essentials that a person needs to get by on a daily basis. So what it means is, yes, we are seeing a bit of resilience in the economy, but this is the resilience that is driven by the need to survive. It's the resilience that you will see coming through the retail sector because we have to eat. You'll see that one coming through the transport sector because we have to go to work, we have to go and move around the country, right? It's that resilience, and we have to pay for electricity, we have to pay for water, the utilities. So now that's why we're seeing, and we are a bit worried about the fact that yes, we are seeing a positive in the number, but at the same time we are seeing a cost of living issue that still is a thorn to households. And what that means to the overall business space is you are going to continuously see a retail and wholesale sector that it continues to thrive and lead the economy, because that's where most of the consumption is going. And you're not going to see these other sectors are doing very well. And I think if you look at the annual GDP figures and the quarterly GDP figures, they show these every month. You can see that it's the fast-moving consumer goods that are required for consumption that are pushing, you know, the GDP growth, while other sectors like your if you look at housing accommodation and all of those hotel and retail sectors, those ones continue to remain subdued, and that's the sector that we usually look at to see how households are spending, their behavior. So when you're seeing subdued activity within the entertainment sector, it means households are basically just surviving.
Oh.
Yeah.
Mrs. Leah, thank you very much for your insights. That was economist Annelies Mbia chiming in on the Eswatini Household Income and Expenditure Survey. This is Nedbank Business Watch. We come back with a discussion segment with Nedbank after this.
Welcome back. You're still watching Nedbank Business Watch. Thank you so much for staying with us. Our conversation today with Head of Branch Networks from Nedbank Eswatini, Zamangwane, is centered around investing, which is one of the very essential topics, but very overlooked in most cases. And a modern poet, which is a rapper, has said before that scared money doesn't make money. So you do want to invest your money. So let's demystify the myths around investing and make you motivated to invest whatever it is that you are saving on the side. Zamangwane, thank you so much for joining us on the program. Perhaps I want us to start here. Nedbank loves to interact with customers across different income levels, right? Are you seeing a shift in how the ordinary Liswati or how the ordinary Emaswati view investing in particular?
Good afternoon, Mnguni. Thanks for having me. I think your quote just is running through my mind. Yes, we are seeing a shift in how Emaswati view money. In fact, we really appreciate that the conversations are happening. The conversations must happen. I think money is relatively tight for all of us. And as Nedbank, we believe that we are the financial experts. So we always want to help customers and consumers understand how to manage their money better and also how to grow their money. I've mentioned that money is tight. So, of course, we start to think of how do I get to save for the future? How do I make a saving when an expense goes up? Or we're in a situation now where we're seeing even fuel prices are going up. So in turn, even the cost of goods will certainly go up. Emaswati are alive and conscious to what options do I have and how far does my money take me currently? Yeah,
a very tight fiscal space for almost everyone, and you're right on that one. But there's often the conversation around starting small.
Yeah.
You know, and, you know, I want to understand how Nedbank is enabling its customers there to really begin investing even with the modest amounts.
I think you are touching on it with respect to some of the misconceptions that people would have around investing. One would typically assume that you need to have a lot of money to start investing.
Yes.
But to your point, you just do need to start small. So in terms of if you have maybe 300 malangeni or 500 malangeni, it is important that you actually start putting away what you can actually afford. And over time, that amount grows as long as you maintain consistency. And it will help you to fulfill and close some of these fiscal gaps that you are mentioning, or also moves you a step closer in terms of some of your financial goals and aspirations.
Absolutely. From a Nedbank perspective, how do you help clients understand the difference between saving and investing and why both are important?
Yeah, so savings and investments are closely related. Sometimes it's difficult to make a distinction. But the key difference is that they're usually for different purposes. So saving is typically for your short-term needs in terms of your short-term financial goals. So that's either you're saving for a holiday, you're saving for some immediate expense, school fees, uniform, groceries even, and even if we're saving for a full tank for every end of the month. Whereas investment is more of a long-term goal. So that's when you are saving for bigger financial goals, whether you want to buy a car or make a hefty deposit on a car or a property purchase, as an example. So basically, we say that it's important to have both of them because they serve different purposes. Short-term, in the savings, maybe for your emergency kind of expenses that may arise. You don't know what will happen at any point in time. So you want to create a buffer for yourself.
Absolutely.
And then investments as well, it serves a different purpose because you have a specific long-term goal that you want to attain and you work consistently to get to it.
Yeah. And so how do you propose Nedbank comes into the play now in supporting its customers in building that, what you call a balance between short-term financial security as well as long-term financial or wealth creation?
I think it's important to have conversations with yourself that are honest with respect to how you want to, what you want to attain. Is it wealth creation that you want to attain? And then, or is it an immediate cushion like we've spoken to? And what are you actually saving or investing for? So in terms of what we present as the bank is basically options that fit different risk appetites. Our risk appetites may not be the same between Zama and Sfiso.
Yes.
Our goals may also not be the same with respect to what we are saving for and how long we want to save for. So those are the key things that you would want to actually ask yourself and align in that. But in terms of the offerings, of course, there's a spectrum of options that fit those different variables to say, is it short-term, long-term savings, accounts, notice deposit accounts, fixed deposits accounts, retirement annuity, unit trusts and shares. All of those are options that build wealth creation or create a buffer depending on your immediate need.
Let's talk to that first-time investor walking into a Nedbank branch today or tomorrow, whatever. How do your teams then guide them in choosing the right product for their needs? I mean, you mentioned a plethora of products there.
So I believe that your need is actually what helps us to determine. Remember, I did say that we are financial experts and we also want to help you create your financial risk. But underpinning that, the initial guidance would be to say, start simple, with as minimal or as low a risk as possible. So these options can include, fixing your money for a fixed term, which means putting away the money and knowing that you're earning an interest. You're earning interest or compounded interest over a period of time. Or a notice deposit account. That's more medium term to say, I'm going to put away funds for a certain period of time and I'll give the bank notice when I want those. But those funds, whilst they're placed there, are actually earning you a return as opposed to sitting in your purse or under a mattress.
Absolutely.
Yeah.
There's often a conversation around time and discipline. And that's very key in investing, right? That's what you say.
Yeah.
How would you say Nedbank then encourages and supports a culture of consistent investing among its clients?
I would say that you mentioned the element of time, and probably time is the best indicator and probably the most powerful tool to have. Time is always of the essence, and we always say start early and start consistently, because the benefit of investing is that you earn the interest, and when you earn, you then start to earn compound interest. So what that means is that you earn interest on the fixed amount that you've invested, and then you earn interest on the interest that it's earned as well. So if someone starts saving at 20 years old, over time, even if they are saving smaller amounts vis-a-vis someone who might start saving or investing at the age of 40 as an example, but they're putting in larger sums, you will find that the one who started much earlier with the smaller amounts is actually making more based off of the time elements, because their interest has compounded significantly. So that is where then the time element comes in to say you start to grow your wealth more, and the consistency ensures that this wealth is actually growing consistently as well. Yeah.
So while you speak to the 20-year-old. I love the example. You're making an example of a 20-year-old and a 40-year-old, and you break down how compound interest can be life-saving for both of them, but particularly for the one who started early. And it just makes me wonder, because we often hear people who get into employment early say, I want to enjoy my money first. And, do you want to talk to that person, that young person right now?
I do want to talk to that young person. I mean, just last month we were coming from the Global Money Week, where we raised awareness on this. I do want to talk to the young person, because there's not a right time, if I may say. The only right time is now, or immediately, when you come to that realization. Though I made the example of the 40-year-old, it doesn't mean that we can't start today. And also, it doesn't mean that you have to start investing with a large sum of money, or I can't afford it, or I'm just not the investing type, etc., whatever you may tell yourself.
Yeah.
But I would say, yes, start small. If you want to enjoy your money, and you're enjoying your money as the 20-year-old, then surely you want to enjoy your money for a longer period.
Absolutely.
So you want to create a fund for your enjoyment. Make it be consistent. Allow yourself to have a consistent life of enjoying. So I would recommend that they absolutely do save. They've just started working, like you've said. They consider options of short-term and long and medium-term type of investments. They create emergency funds at a minimum, so that should the fund go a little bit lopsided, they have a cushion to bail them out, if you may. So I would recommend that they just maintain the consistency. There are various options in the market, and there are various options that are sold by banks and financial institutions that would fit that profile of a customer. So it's all about, once again, determining your needs. What does that 20-year-old want in 3 years, 5 years, 10 years? Or what do they want in 6 months or a year? That's part of this enjoyment phase.
Absolutely. So I take it that next to time, the next critical thing is discipline.
Correct.
Because that then informs the consistency, and the consistency is essential, as you put it, right? But from your experience, what would you say are some of the most common mistakes that your customers make? And then how does Nedbank come into the play now to make sure that these people avoid these pitfalls?
Yeah, I think we've just touched on some of these. Common mistakes. It's the voices in your head to say, actually, I don't make enough money. I'll start investing when I make more money, or I'll start next year. And we're having a conversation at an apt time. It's Q2. Let's review our, what do they call them? Goals.
Yes.
What are the goals that you've put in for the year? Let's take stock. Am I still on track? Am I still doing what I wanted to do? Are my financial aspirations still in order? And it's okay to start over. So do start over, and any time is appropriate time. But also, I do want to stress that the longer you have or listen to these voices or delay, then you lose the element of time that we've just spoken to.
Yeah.
Which means that the value or the creation and wealth that you're trying to build or create is also slightly impacted. But that's not to say that you can't build the consistency and add additional income into your savings and investments. Absolutely. But those are the common mistakes that we find. We also find that people may not understand the risks associated with some investment options. So I would also encourage customers to do their due diligence, to research, to find out what works for them, to understand how the products work for them. I mean, we see a lot of cases of bofaqata, as an example, where you know, something seems too good to be true. Invest 300 and we will triple your money in 2 weeks.
Just, come on now. Yeah.
So those kinds of examples should be red flags and triggers of going off. So you have to be sure that you understand the risks. You have to be sure that you are comfortable with the risk you are taking in terms of the appetite. When will you get your returns? How long will your money sit there? And do you understand what potential risk there could be there with respect to the interest that you earn and the like? Yeah.
Absolutely. So I take it quarterly reviews, if you will, of your goals, very, very essential. But also being realistic about your goals and ambitions, very essential as well. Imposter syndrome, that time that is delayed, you're saying it's not denied, but it's very important to know how to have that conversation with yourself. And I think if you're able to, vet those mistakes and make an informed decisions, then you'll be good. I want to give you just one last opportunity to speak on whatever I may have forgotten to ask you about, because we're done with this conversation.
Yeah, I think I want to reiterate the 3 things that we spoke about with respect to choosing your investments. Reevaluate what's your financial goal. That's the first one. So you must make sure that you determine what is your goal. Also, how long are you willing to put your money aside for? So is it short term? Are we saving for emergency, or are we saving for a long-term goal? And then how much flexibility do you need? Will you need the money immediately, now, or how would you want to access your funds? And how would you want to contribute to your funds? So those are the 3 main things that I would highlight in terms of the selection or the choosing of investment options, and then the consistency. Keep in mind the consistency, the diligence, the discipline that we've spoken about. It doesn't help. Your quote is talking about risk to some extent, but also we see a note that you'll put away some money in a savings pot or whatever the case may be, but when you feel like I'm really broke and it's a week before payday, so you start to tap into that, and that sort of erodes the discipline, because part of the discipline is invest, tuck the money away, but also learn to live within what is then remaining. That's why we encourage that you save what is affordable to your pockets. Don't overstretch yourself.
Overstretch yourself.
Yes.
Absolutely. Zama, thank you so much for your time. Zamangwane Dlamini, Head of Branch Networks from Nedbank Eswatini, decided the most powerful tool for financial growth, and that is investing. And there you have the conversation. You can make an informed decision as you invest, whatever it is that you can invest. Very important. Let's go for a net break. The show continues when we return.
All right, so welcome back. This is our final segment. We're joined by Nedbank's Bongani Mabuza for today's market analysis. A very good afternoon, Bongani. Welcome back. Thank you for coming through. It's been a while.
Good afternoon to you, too, and good afternoon to your viewers. It's a real pleasure to be here. Yeah.
So, yes, global war, global intention, it's getting worse. It's getting more intense. How is that impacting markets today?
Yeah, no, thanks. I think you hit the nail in the head. That is what is shaping markets still. The US-Iran war, which is being prolonged. There was a bit of relief when that 60-day truce MOU was signed, but as we saw, that didn't last very long. So as of today, we're now officially on the 11th day of the US striking targets in Iran, and that doesn't look like it's going away. The US president played down talks of any immediate mediation between the two countries, which seems to have spooked markets as we will see, especially from a commodities perspective.
Let's just quickly take a look at commodities as you try and explain.
Yeah. No, that's right. Yeah. So what you see is that the price of gold is up about just over 1%, and this is really due to uncertainty that's coming from the war.
Yeah.
And also because the price of gold had come down, so you're now seeing deep buyers, which are supporting the commodities. Price of gold now being at $4,119 dollars per ounce. If you take a step back and go back about a year ago, price of gold was closer to 5,000. We actually reached 5,500 at peak before this war started. So it's a long way from where we're coming from, if you want to put things and frame them in context. But it's up just over 1% today. If you look at the price of Brent as a commodity, that's up quite a bit, just over 9% today. And again, as I said, that's because of the sentiment coming from President Trump, who has played down the prospect of near-term talks with Iran, while also threatening broader strikes. So it just means that as things stand, there seems to be no end in sight to the war.
Okay.
Hopefully something changes soon.
So with what's happening with the war, how is that shaping equities this afternoon?
Yeah, I think it's a really, really good question. Equities are broadly up. If you look at the S&P 500, that is up about almost 1 percentage point yesterday. And this was really helped by a move by investors back into AI stocks, as stronger than expected earnings helped that sector. We also saw chip makers which fueled the rally, which was very helpful. But there's also expectations of more earnings reports that are coming through. This week we expect earnings reports from ServiceNow, IBM, Tesla, Texas Instruments, Alphabet, AT&T in the US, and those are all big blue chip companies. Last week we had the earnings reports from the banks, all the big banks in the US reporting. They all reported very strong earnings. I think this is just a reflection of investor expectations for that to continue in terms of those strong corporates reporting strong earnings. But the actual reports are going to tell.
All right. So lastly, let's take a look at currencies this afternoon. Lilangeni trading against the US dollar.
Yeah. Look, the Langen is holding its own against the major currencies. As you can see, it's stronger against the dollar, against the euro, and against the pound. Against the dollar, we're at 16.46. Against the euro, at 18.78, and the pound at 21.9983. And if you want to understand that story, I think you need to take maybe 2 steps back and look at inflation. So we had SA inflation numbers that came out at 10 a.m. this morning, and they showed SA inflation at 5%, which is the highest inflation level in SA that we've seen in some time. The inflation story, and the inflation is a result of what we're seeing with the war, leading to commodities prices being higher, and also repricing of a lot of other consumer goods. The expectation then is that inflation is going to influence interest rates in South Africa and then in Eswatini. We have the South African Reserve Bank that is meeting tomorrow to announce an interest rate decision. The broad market consensus is that interest rates are going to increase by 25 basis points in South Africa. But I would add a caveat there to say that there is focused risk, with some market analysts saying that we should not be surprised to see that some members of the MPC in South Africa would opt to keep rates on hold. So the expectation is that rates are going to increase. The bias is towards an increase, with some risk that rates would remain the same. And then we have the Central Bank of Eswatini also meeting on Friday to announce its MPCC decision in terms of what interest rates are going to do. And again, the same story holds there. In the past, we have seen the local central bank deviating from the South African Reserve Bank in terms of interest rate decisions. The broad market consensus now is that the central bank might follow the SARB, but again, there's a bit of focus risk. We've seen the central bank is not shy of deviating from the SARB, depending on what they see in terms of local fundamentals.
All right, thank you, Bongani, for that analysis. Unfortunately, we've come to the end of our program. You were watching Nedbank Business Watch, and if you've just joined us, worry not, you can still watch this episode on our YouTube page, Eswatini TV. We'll see you again next week, Wednesday, at exactly 2 p.m. Enjoy the rest of your day.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.
Mswatu inkosi ithula akayithathe akahambe nayo